A delay in responding to the Russian oil price cap is increasingly convincing market participants that Russia will still come to terms with the steps taken by Western countries. There are rumors that Russia will not cut supplies and eventually sell oil at prices below the introduced price cap. Obviously, such expectations contribute to lower oil prices. However, some believe that Russian government is considering a number of options, including banning oil sales to all countries that supported the restriction, even though intermediaries in the form of third countries. Negotiations on this issue are still underway, and the final decision will hardly be made this week, so oil will most likely extend losses. In addition, oil prices are trading under pressure from major US banks' disappointing forecasts. They express concerns about a looming recession in the United States, which in turn dents the prospects of energy demand and consumption. Thus, Brent crude oil futures settled below $80 per barrel for the first time since early January. This suggests an increase in the bearish sentiment in the oil market. If the price fixes below the control level, sellers will have every chance of dragging the benchmark down to the 70 mark. Meanwhile, the ruble continues to trade around 63 rubles per dollar. In after-hours trading, however, the dollar-ruble pair even dips below the level of 60 rubles. The Russian currency seems to have stabilized and halted its slide. All this indicates that, unlike commodity market players, foreign exchange market participants expect a tough response to the Russian oil price cap from Moscow. However, this issue is still under decision and there are no specifics yet. What's clear is that the retaliatory measures will almost certainly contribute to a strong rally in the Russian currency. At least all previous economic measures introduced in response to Western sanctions used to result in a stronger ruble. Gold keeps moving around the levels of $1,765 and $1,780 per troy. Moreover, things will hardly change until Friday, when the United States reports data on producer price index. If the readings is in line with the analysts' forecast, suggesting a slower pace of retail sales growth, gold will most likely advance to $1,800 per troy. Until then, the market is expected to remain stable. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.